This crypto opportunity is literally the perfect macro opportunity of a lifetime. This is a very high probabilistic outcome that the next 2 years make life-changing money. Really, I'm hyper-focused Solana.
As we head towards 2024, Solana's trajectory becomes a crucial question for the cryptocurrency market. A look at the Solana chart reveals strong growth, followed by a recent correction phase. The moving averages have aligned in a way to suggest a strong uptrend, and the price remains consistently above these indicators. In recent years, Solana has gained popularity, attracting the interest of many investors. However, the question remains whether this is a solid long-term investment. Blockchains, including proof-of-work (POW) chains like Bitcoin and proof-of-stake (POS) chains like Ethereum, are generally slow due to the method of adding blocks to the blockchain. The Solana blockchain addresses this problem by implementing proof of history (POH) to facilitate chain growth and user rewards. Its capacity is 2,000 transactions per second. Solana is part of decentralized finance (DeFi), which aims to provide financial services without relying on traditional banks. Supports decentralized applications such as Audius for music sharing and Phantom Wallet. However, Solana has recently experienced a pullback, suggesting a period of consolidation. This could be attributed to active profit-taking by venture capital firms, which was an expected development given the asset's substantial appreciation over the past few months. Pullback is also part of the natural market cycle after such an impressive rally. Improvements in security protocols, more rigorous project monitoring, and an overall shift towards more sustainable, utility-oriented applications will be essential. The network's ability to scale efficiently, maintain availability, and foster a secure environment for DeFi and other applications will be determining factors in its trajectory. In today's video, we will tell you about Raoul Pal's view on Solana, as he thinks that 2024-25 cycle can change our life. But before we get into the video, make sure you subscribe to our channel and press the bell icon to never miss an update. The everything code simply indicates liquidity, and liquidity determines assets. And the more liquidity, the more risk people take. So when you see liquidity bottoming out, that allows you to start looking at Ethereum during that free fall and afterward. But it perfectly maps the liquidity and liquidity of the fund. You also have a corresponding chart template. So this liquidity cycle makes things very easy. But the everything code is the culmination of 30 years of work. But what most of us didn't understand was the year 2008. The whole world changed. We know it has failed. We know the debt system has failed. And since then, people have been trying to look at the world. And all the code said last year was that something fundamental had changed because of the use of the balance sheet and cash to manage things. What we discovered in 2020 was that the use of the balance sheet in particular was not intended to inject new money into the markets, but rather to devalue the currency. So what happens is that the price of scarce assets stays the same, but the value of money and the purchasing power of those scarce assets decreases. This is very different from wages because wages are a variable asset, just like company profits. This is why stocks become more expensive, because profits do not increase as much as currency devaluation. The same thing happens with wages and explains why the rich get richer and the poor get poorer, because the rich owns those assets. But in 2008, when the world exploded, we had a sort of debt jubilee, debt forgiveness, and the cancellation did not concern the entire debt, but the payment of interest. Thus, each government reissued its entire debt as quickly as possible within the 3 to 5 year zone. It seemed like the perfect place, and they all went there. It's like 70 or 80% of all debts of all governments are in this 3 to 5 year zone. What happens is every 4 years or so, they have to fund these things, and interest rates generally rise at the end of an economic cycle, slows down the economy. The federal government begins cutting spending, then uses the balance sheet to monetize the interest payments owed as they increase. They get worse all the time. This perfect 4-year cycle is the same as the US election cycle, the same as the Bitcoin halving cycle and the liquidity cycle. And if everything is a perfect mirror, as if each cycle was a mirror of the previous one, future cycles can be predicted. And it works wonderfully. We use the code of everything to examine liquidity cycles within cryptocurrencies and determine what works where. At this point in the cycle, the first part of the cycle, Bitcoin is outperforming because everyone wants the safest asset because it's still a little bit painful from the bear market. They're not very sure. And then when things start to improve, the cash starts to come back. Once global liquidity year after year starts to be positive, Ethereum starts to outperform. At this point in the cycle, the first part of the cycle, Bitcoin is outperforming because everyone wants the safest asset because it's still a little bit painful from the bear market. They're not very sure. And then when things start to improve, the cash starts to come back. Once global liquidity year after year starts to be positive, Ethereum will start to outperform. And Solana was just a fluke because there will always be a leak. Ethereum was the last cycle. The idea is not to make perfect projections. The idea is to give us an overall understanding of how this should work. Is this going to work well? The answer is yes. Could it be huge by the end of 25 years? Between 500,000 and 1 million Bitcoins? It's possible. But there's probably a 20% chance. Well, an 80% probability is probably somewhere between 150,000 and 300,000 by the end of the cycle. And that depends on as much liquidity as we hope for going into the cycle. There is a lot to prove. It's a thesis, a theory, and it's not the exact code of everything is here. We believe this is a curve that captures most of the distribution. This is 90% Solana, 20% Ethereum, and 10% for high-risk coins. Have a plan and write it down. Write it down, because you will lose your mind in the middle of the cryptocurrency bull market, and your plan might go wrong. You should average the next 3, 2, or 1 months, and just pull the trigger now. Even if it drops by 30%, which is normal, it will rise again. So don't even worry about the price. Where you get it, and then write it down. Don't listen to your friends or FOMO because your friend makes more money because they bought a meme coin that increased 57 times. Do not do that. Continue with your plan. Make sure it's about 80% of the base assets. This isn't some random coin you've heard about and think will be the next big thing. It's not a great advantage to be in your 10% bracket. It's like Bitcoin, Ethereum, Solana, and XRP, maybe whatever. There's a group of 10 great people. Don't bother keeping it simple. Otherwise, it goes into your 10% bracket. No FOMO, no leverage. You'll be so tempted to go. Well, you might lose 3 times leverage here. 3 times isn't much. So use 100 times leverage. 3 times is good, 35% decline. You have lost your capital. People don't realize that 35% is normal and stop trying to trade it. The easiest way to do this is simply buy and hold. This is the simplest strategy in a market that returns an average of 140% per year on the largest asset. You do not need to do anything else. You don't need leverage. No need to use FOMO on random coins. And then the other thing is to be careful not to lose control of your pieces. This is the last thing. So you've done it right. You've bought the right asset allocation. You're prudent. You filter out the FOMO. You have fun with your 10% portfolio. You have no influence. So whether you're using an accounting device, whatever it is, you need to cover that as well. This crypto opportunity is literally the perfect macro opportunity of a lifetime. It is the best performing asset class of all time. You won't go to infinity doing this, but it's very likely that the next couple of years will generate life-changing money. That's all for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.